Live, and we're ready to rock.
1 second.
All right, good morning, everybody. This is Chris here at the London Close. I'm in Honolulu, Hawaii, and I've got the man with the plan here, Nick, all the way from Austria. And we're going to kind of run through the London Close here. Good morning, Nick. How are you?
Very, very well, thank you. It's
good evening for you.
Here. Yeah. It's well, I'm doubly confused. I'm the Australian from Austria, so there you go. Yeah, interesting times in the markets.
Yeah. So yesterday, oil went negative for the first time in history. That was pretty amazing here, and I know they had that big option expiry today for May. So I think the volatility continued through today, but I think after today we should see a little bit of a prop up. So that could bode well for oil and also the CAD a bit.
Yeah, interesting. I was wondering how dear old CAD was going. You know, I've been so busy on other projects, I haven't had a chance to look closely at the chart. So I'm really looking forward to getting into it. But I see oil's down around. Spot oil on the Uanda feed's down at $14. I never would have thought I'd see that. Crazy.
Amazing. Yeah. Amazing.
Wow.
So, yeah, kind of running through just today. Obviously, you know, the dollar and the yen are being bid, but the yen safe haven. The pound's weak on the continuing UK-European Union talks. The euro did find a little bit of buoyancy with the ZEW expectations rebound. You know, the commodity currencies, so the Aussie and the Kiwi weaker, but the Kiwi in particular is especially weak from yesterday with the RBNZ mentioning that they would have no problem going to negative rates. And that was viewed obviously as a weak position. Where, interestingly enough, the Kiwi was looked at in a positive manner before that comment. So I don't think that's helping the cause. And that got us out of we had a Euro-Kiwi position yesterday. It was a real tight stop. It was like a 7-to-1 reward to risk, but that comment really sunk the boat. So got out of that one. But hey, that's how it goes sometimes with the markets.
Yep. That's interesting about the Kiwi. I'm amazed they've said that, because they're always one of the golden currencies that said we never need to go negative. We have plenty of room to do cuts and then QE if we have to, but we're not going to go negative. So if they're toying with that now, and also I thought they were doing really well on the Corona front. Obviously, have been out of the news flow for 24 hours and everything's changed, and that's the way it is. You step away for one day and the whole world's different at the moment.
Yeah, no, I agree. And I think, you know, yesterday, you know, that was kind of the reasoning for the trade. So New Zealand announced that they were getting ready to ease restrictions on the lockdown. So that was obviously viewed as a real positive for the economy. But in the coronavirus world, news changes day to day. And, you know, I'm sure you would agree that that's why it's important to really have a stop and really stick with it, because, you know, fundamentals and sentiment can change, and, you know, you have to be protected in your account.
Yep. 100%. Absolutely. So I'm really curious about what your daily schedule is, because it's all about the process in trading. So I always love being a fly on the wall and watching another trader's daily process. Find it fascinating. So please, Chris, lay it on me.
All right. Well, you know, I have the currencies on a big board, and I throw a dart, and whatever one it lands on. No.
You too? Yeah. Great.
Hey, guys, that's the secret of the pros. There it is.
Yeah. Well, that's for people who are buying signals from us for our own accounts. We of course, we put a lot of effort into it. No, I'm only joking.
Yeah. But, you know, just running through my methodology, I'm really big on the London close trade. Because, you know, the markets are not, you know, fundamentals is you know, one part of the sentiment. Obviously, technicals and price action is another part, and that's why I really like the London close trade, because most of the news and the fundamentals have been laid out for the day, so the crazy volatility is gone. And for me, I do better when it's a little bit calmer.
Yeah, right.
And technicals, usually when there's a position that is gone far in one direction, long or short, that might not be necessarily super strong due to the sentiment, there's usually a retrace as the London books get out of their positions at the end of the day, because they don't intend on holding it for a longer period.
Yeah,
So
right.
that's where, looking at the sentiment, I'm not necessarily looking for the strongest and the weakest pair. I'm looking for a pair that doesn't make sense for the distance that it's gone and is in for a
Interesting.
retrace. And that's kind of the basis of my methodology, because I'm trading on that specific human factor time frame where those London books are exiting their positions for the day. And usually what happens when they exit and the position's not necessarily super strong, that'll continue into Asia. And for me, time-wise, that works because that's during the day here in Honolulu.
Yeah, it's a really interesting approach, and I mean, it's great that you found a niche like that. I mean, so much about trading is finding your little pool to fish in where there's not too many people, because it's a zero-sum game. It's like, if everyone's doing the sort of the London Open breakout or whatever, the obvious thing, doesn't work in trading. So, you need to find your little niche. So that's really interesting. It sounds very powerful to filter in that way.
Well, yeah, and the good thing is you can get on a nice 2-to-1, 3-to-1, 4-to-1 reward to risk, and that's the other part of the edge, is making sure that you've got a nice reward to risk. But going into the end of day US before the spreads really hit you, and the swap hits you, if you're looking at a 1.5 gain to 2, it might be worth your while to even close out. So there's a lot of options with this trading methodology, and the moves tend to not be quite as fast between London close and end of day.
Yeah.
So I find, especially for maybe newer traders or even intermediates, it's a little easier to monitor. It's real tough, especially London Open is tough, but I'd say especially the U.S. Open is probably the toughest for new traders to really get into this. So this is a little bit more of a slower pace, and it's easier to kind of monitor things, and I think it would bode well for a lot of people.
Yeah, that's very interesting, and I totally agree. I mean, it's a lot of newer traders, they want to trade directly the the economic data points, whereas really they should start with the phase 2 move, or in your case when it's been overdone, or it's been kind of you have bad news and it doesn't sell off. You're looking at those kind of situations. So, but that's a really good thing for people who have a job as well. They can come in after something's happened and they can look at the market from that perspective. So
yeah, and I think for London traders and European traders, this is actually a really good opportunity, because you're looking at after work. They can get home, grab a little bite, and trade that London close, and we'll monitor it from maybe 5 p.m. to 9 p.m. And I mean, it bodes well with their schedule over there too.
Yeah, cool, man. So do you have an automated EA for this? I'm only joking. I'm sure you'll get emails.
You know what? I do. It's only $999.
Yeah.
But you know what? Today, $29.99.
Fantastic. Yeah. complete with hindsight filter built in. Yeah.
Yeah.
Excellent,
exactly.
man. Okay.
So just running through the methodology, really it's all free resources, because I believe that you can trade with these free resources during this time. So there's a nice little free breakdown of the update. Now this goes right before the U.S. news, so you have to check and see what's happened in the U.S. news. But Scotiabank has a nice real breakdown on all the different currencies and kind of where they're at for the day. So I'll browse through that. I'll look at Forex Live to kind of paint the full picture. And once again, what I'm looking for is not necessarily the strongest and the weakest currency. I'm looking for a currency that should, that's strong today in terms of trading, but shouldn't be as strong, and a weak currency that shouldn't be as weak. And based on that, I will look for a level of support and resistance that maybe the pair is running into during the London close trade, and I'm looking for that support or resistance level to hold through at least through the London fix and maybe the London close, which the London fix is 4 p.m. London time, London close 4:30 p.m. And usually after 4:30, if that position's held there, it's going to hold, and you'll get in for a nice retracement there. And
you mean the US close?
No. The London
close.
London
close. Oh wow. Okay. Yeah.
Yeah, so the London fix is 4 p.m. and usually that's where some bigger moves take place. Dealing desks will try to get the last little inch of profit in one direction, and usually there's a retrace after 4:30 if the currency's not strong. If there's a really fundamentally sound reason that the currency's moving, it's going to move that way for a few days. I'm not saying you can't make money that way, but that's not how I trade. So that's kind of how I'll look at things in that light there. So that's really simply it. And like I said, I'll look for like today, Euro's pretty strong with the ZEW expectations rebound. The dollar is strong with the weak crude oil, which just was unbelievable these last couple of days. But as I was talking about earlier, there was an option expiry today. So I think after today, the oil will actually rebound a little bit. That's my opinion. And, I take no stake in my opinion because I have been wrong before. But
I'll give you his address so you can go around and complain. That's interesting.
If you try to come out here, it comes with a 14-day quarantine. So I don't know if you can make it out here.
The markets are wild when like a relative or a friend calls you up, someone who's had absolutely nothing to do with the markets and has never asked you anything about the markets, and out of the blue they call you up and say, I'm thinking about getting into a position on oil, and you're like, okay, can you help me? I say, what broker do you use? I don't have one. I need that first. I'm like, yeah, okay. I'll look into it. The things are going pear-shaped when you get those kind of phone calls.
That's hilarious.
Or the taxi driver's giving you advice on, how to trade the recovery on the S&P or something like that. Which is selling off at the moment, by the way. I've noticed. I still think there's going to be a lot of downside, incidentally, on that. But
Well, let's see if we have anything to go on here today. So I use a free tech analysis software, and really it's just to identify levels. So it just makes it easier for me. I don't have to go browsing through charts all day long. I can look at the pairs that I'm interested in and see if there's a real strong level that I'd like to trade. Once again, you can definitely do this manually, but for me, it just makes it much quicker, and it's good for me. So actually, what might be interesting today is a pound CAD.
That sounds juicy.
Let's take a look here. So let's see. Pound CAD on the 60-minute. So obviously the pound is a little off with the negotiations. You can see this is a pretty big level here. It spiked up and then dropped down. You and I are both kind of in agreement on this. This is a great tool, the volume profile tool.
Yeah. And
I believe you're the one actually showed me this years ago.
Yeah.
So
I can't. I honestly cannot trade without this. It amazes me. People get into all these esoteric Ligure, triple smoothed, whatever MACD, RSI things, and they don't look at like volume at price. It's like it's amazing. And also with the, we don't have volume in spot forex. You can use the futures volume instead, but actually the tick volume to that, like I did read a research article from somebody who had access to this. Is it the EBS? I think it's like the actual interbank rate, and they looked at the tick forex, the tick data, and they looked at the actual volume data, and it was like 80, 90%. It was really, really in line, the number of ticks to the number of contracts traded. So you can use it. So I know a lot of people say you can't use tick volume, but it's actually you can. And then this is, volume at price. Obviously it's something pretty good to know if there's been a lot of activity at a certain price level.
Yes.
Because we're trading price levels, we're trading up and down. Everything else is an abstraction. All of the candles and the bars, everything is an indicator except that price level up and down. So yeah, I think it's fundamental. But anyway, rant over.
No, I agree. Yeah. So, obviously the red line is the most traded price, but I kind of look to see where volume starts building up, because to me, this is kind of the zone. There's not it doesn't always go to this exact level. It kind of goes into the zones. That's what I found. So like for this trade, I'd be interested in maybe a short if it got up to this level, and this would kind of be my protection right between here, this zone, because the volume starts really tapering off up here. This one, so I'd be a seller at maybe like 75.15 if it got up there, but we'd have to wait, and I'd be interested if it got up there in the next 15 minutes, which it's not going to do. So yeah. I don't know about that one, but the other one that I'd be interested in is actually the Euro Swiss franc long. So I think this is actually a really good trade today.
Interesting. Yeah.
So, I mean, you can see the volume's really, really holding here. Yep. And with the ZEW expectations, and I think it's been risk off for a few days with oil, I think this will prop up to maybe 106. So you might be able to get in with like an 80 pip profit target and like a 10 pip stop. So yeah, I'm going to actually do that today.
Yeah.
Because it has to get by all this volume
yep.
to stop us out.
Yeah. So, and like one thing I'll say about, I don't go into all the esoteric ins and outs of volume profile. I think it should be just like a really simple tool. There's no formulaic way of using it. But something like it's very obvious if there's been a bunch of people trading at a certain level, when it gets back there, it's going to be hanging around for a while. So it's not just going to slice through it.
Yep.
Also, if there's an area where there's hardly any trading, when it comes down there's not going to be much action, and so the auction will move off somewhere else looking for liquidity. So just very simple principles like that, which of course you can't see at all just looking at a bar chart. So yeah.
Yeah, and the one final thing I'll kind of share with my methodology too is, so you see I have the stop near the lows here, is I don't have a hard stop at this low. I'll actually put it down maybe an extra 20 pips.
Right.
My stop will be if the price closes below that stop on the time frame that I'm trading, because a lot of times, I'm sure you've seen this, is big players are looking for extra liquidity, so they'll take out those stops there to get that liquidity that they need to move a price. So you can see by the price action. I mean, if that thing goes down and then just pops right back up, that they're just trying to get extra liquidity.
Absolutely. Yeah.
If it closes there, then it's usually you're in for a leg lower. So that's kind of my telltale sign. Yeah.
Yeah. Yeah. And sometimes I have exactly the same attitude to that. After years of getting stopped out, and also it's very nice sometimes. If it comes down there, you can make a decision. I mean, it's like you always have a choice to make a decision. It's like a horse race. I mean, it's the only horse race where you can change how much money you have and on which horse in the middle of the race. So why have a hard stop? Why not wait for it to get down there and have a look at the price action there? That's like a great opportunity. So if it gets down there and it spikes through, like you say, like there are telltale signs, you'd be like, oh, that's interesting. It looks like they just wanted to run the stops to get some liquidity, and now they're going to take it higher. So, I mean, you either stay in, or you can even then you can bring your stop up to under that bar, and now you know that if it goes and now breaks to a new low, well, that's a very bearish sign. So there's all kinds of things you can do there. Timed stop, and there's a bunch of different things.
Well, I think that's something that definitely you and I will cover, because I know for myself that
It's never
that's
looked
probably
at.
one of the things that took a long time to learn, is
Yeah.
not just looking and seeing a candle, but actually being able to interpret the price action and what is the market doing and where is it going and why.
Yeah, for sure.
So, I mean, this is pretty much it. So we got the position in. The reward to risk is a 7.91 to 1. So I think that's pretty good.
Very nice.
And that's the great thing. Is, I mean, hey, we only have to be right once every 4 or 5 times, and we're still making money here. So
yeah, it's a really nice way to trade. And I think if there seems to be something on the forums and the interwebs at the moment about, I'll have a wider stop and give it some room to breathe. My opinion is you're not really doing your job properly. If you're not nailing those entries, and you can't get a good risk to reward, you shouldn't be taking the trade, or you should be looking more closely or drilling down to a lower time frame, in my opinion. I've tried both and going for and it's great. I mean, sometimes I even played around with crazy things like a 10-point stop and a 150-point target, right?
Wow.
And you go and do the maths of how few times you have to be right. And I've gone the other way. I've had a 10-point stop and a 150-point target just on back testing and had a look at it. And it's amazing how you'll almost get to, like, you're doing the back test and you almost get to, actually, I've taken so many 10-point winners. I've almost got to, and then you get stopped out for 150 and it just wipes it all out and then some. So it's interesting. Yeah.
Well, it's kind of like, I hate to use this analogy, but it's kind of like if you have a criminal out there on the street, you only have to be wrong once to get caught and
nice go to jail. You have to write a trading book, man. That's a good one.
Same thing with the account.
From personal. Are you teaching from personal experience here? Is it? Like,
I won't.
I don't want to know. I don't want to
know. Of course not.
No, you've got a Buddha in the background, man. You're a good guy.
Yeah. And hey, man, that's, and I know you are too. And I think for both of us here helping people, I think, I definitely believe you help people that comes back to you. And
absolutely. Yeah.
I wish I had somebody that kind of helped me sort through all the bullshit at the beginning of my career. I would have saved years and thousands of dollars.
Absolutely. Unless they're on the other side of the trade, and then they're just like they're just characters. They're mincemeat, because it's if you're on the other side of my trade, you're not my friend.
Yep.
But if you come on the stream, I'm happy to share everything I know.
Yeah. So, well, hopefully another time I can jump onto your London Open here and I'll return the favor here and ask you a little bit about how you trade and what your methodology is. So.
Yeah, that'd be awesome. What time will that be? What time is that for you?
Here in Hawaii, I think that's 9 p.m.
9 p.m. Okay.
Yeah, so that's not a bad time.
Yeah, that'd be great, mate. No, it's been really interesting watching your approach because I'm so enculturated to trading in that time, the London Open, and also because I traded for years in Australia, so it was like I mean, it would, like, for me, staying up until the London close was like, it was like, you had to have 10 cups of coffee to stay awake. And I actually, and for a while I traded, for a long while I traded the Open, like the S&P. And that was just, killed my health, staying up until 3 a.m. every night. So it's really interesting. It's a different way of looking at it. And also, in a way, you're also trading the Asian session as well, or you're getting a position into the Asian session, which is
yes,
which would be very interesting for Aussie traders. They could get up early instead of staying up late. So potentially, I'll have to look at the clock and just confirm that. But yeah.
Well, and you know what, with these London close moves, some of these moves, like the Euro Swiss one, I mean, obviously to get to 106, it's probably going to take a day or two to play out. So to me, this one's more of a fundamental kind of move that should be taking place here. But sometimes these trades happen real quick. It happens within an hour. So it kind of just depends. But this one I'm willing to hold for a couple days, and that's usually the time frame, anywhere between an hour and a couple days is how long these trades will last. But to your point, you get a good strong reward to risk. It's kind of worth holding it, and there's no stress, right?
Yeah. Yep. There's no stress. Yeah. And then all of a sudden with all these, you know, when you're putting on a lot of trades, you should trade small and trade often. I really love that. I think it was Tasty Trade who made that that phrase famous. You know, trade small and trade often. You put on tons of, so you're like, you're setting lots of little traps everywhere. And then sooner or later, bang, something's going to fall into that trap and you get this big windfall. And it's a nice feeling. And then you have less attachment to the trade going well. And I mean, it can be hard to get, you know, 8 or 9 losers in a row, but I think it's character building. So
exactly, discipline.
yeah.
All right, man. Well, hey, thanks for joining on here for the close, and appreciate it, man. And
thanks for having me, man. Yeah,
we'll be on London Open next time.
Brilliant. Okay, thanks, Chris.
Talk to you later. Thanks.
Bye.